Let's review a recent tax court case where a real estate investor claimed a $22,000 tax deduction. The IRS audited him and they ended up in tax court. And at the end of this video, I'll tell you if the tax court sided with the taxpayer, the real estate investor, or the IRS. Okay, so the tax court case that we're looking at is Faradas versus Commissioner, and it was actually just filed last week, July 11th, 2024. So it's pretty recent. It does have to do with real estate professional status. So we'll get into that here in a second. So the first thing that we want to look at here is their 2020 tax return, because that's what was audited and that's what they're arguing here in tax court. So the taxpayer built a carriage house in their backyard and they received rents of $875. They had mortgage interest of $6,700, and then they had depreciation expense of $16,522, which led to a total tax loss of $22,376. And that is what they claimed against their W-2 income. So they reduced their W-2 income by that $22,000 amount. And if you've listened to a lot of our content, you know that there's two ways that you can essentially take real estate losses to offset your W-2 income. That's to either qualify as a real estate professional or it's to run the short-term rental loophole. Now, before we actually get into the rest of the case here, I do just want to call out that this was probably an audit red flag from the very beginning, because if you see, first, we only have $875 of rents received. Anytime that we place a property into service and we have very low rents, we're automatically at risk. But additionally, we have mortgage interest and then we have depreciation. Where are the other expenses? Where's the property management fee? Because it does say a little bit down here that they hired a rental management company. So where are the fees for the rental management company? Where is the allocation of insurance and property taxes? Where is the amortization of the loan fees, right? We have a loan. So where's the amortization of the loan fees? None of that was reported. So it was a really bad tax preparation job. And whether this person DIY'd it or hired somebody probably really cheaply, this is the value of tax preparation, right? It's making sure that we don't put stuff like this on your tax returns, because this is an audit red flag. The lack of completeness will flag the IRS for an audit. So be really careful when you're making those tax preparation decisions. But regardless, let's keep going. So in 2020, Ms. Moore, his wife, worked 40 hours a week, so $82,000 earned, and then the taxpayer himself earned $78K and also worked 40 hours a week, right? So we have two people who work full time. Remember that. So Mr. Faradas found time to construct the carriage house during 2020, even though he was working his full-time job. And then it was the testimony was that she did not work at all. She did not do any of the construction. So we're just now looking at Mr. Faradas for a potential real estate professional status election. Now, what's interesting is that the opinion here actually talks about short-term rental, right? So it says that they put the carriage house into service and they rented it on a short-term basis, granted for only $875 of gross rent, right? So automatically sketchy, but that they did rent it for as a short-term rental. However, the whole case focuses on real estate professional status. Short-term rental, the short-term rental loophole was never argued at all. So there was no mention of the 7-day test. There was no mention of material participation tests, outworking my property manager, none of that, which tells me one of two things. One, the taxpayer realized that they don't actually have a short-term rental. They didn't meet that 7-day test, or they were just underrepresented in the audit and in tax court. So that was just kind of an interesting thing. Now, the way that tax court opinions work is they always have this discussion where they go through the burden of proof. And then they talk about how rental losses actually work. So if you're ever actually interested in a narrative format on how can I deduct rental losses, you can pull up pretty much any real estate related tax court opinion and it will walk you through step by step how they look at this stuff. So I just kind of highlighted this. These are the two tests for real estate professional status. You got to spend more time in real estate than you do at your W-2 job. And this is the downfall here, right? So Mr. Faradas worked 40 hours a week in 2020. And we'll see that here in a second. So he's got to spend more time, an additional 41 hours a week, 81 total hours of working a week in order to qualify. And then you also have to spend at least 750 hours working on your real estate business. So this is the last page. This is a short tax court case, a tax court opinion. It was a summary opinion. But what we've got here is the actual analysis by the judge. So Mr. Feratis worked approximately 40 hours a week. This is what he testified, and he took a 2-week vacation. So that means he worked 2,000 hours during 2020. He testified that he spent 2,500 hours constructing the carriage house in 2020. So basically, he said that he worked a lot of weekends and after hours, and the court believes that he did spend a lot of time constructing the carriage house. However, it does not find it credible that Mr. Feratis spent more hours constructing the carriage house than he did at his full-time job. The court finds it implausible that Mr. Feratis would work 40 hours a week at his full-time job and then spend an additional 48 hours each week constructing the carriage house. So the tax court just didn't buy the argument that he spent more time in real estate than he did anywhere else. The petitioners cannot prove that he spent more time in real estate than he did anywhere else. And because of that, the tax court says, we don't even need to address the reasonableness of your receipts. We don't care how good your time logs are. It doesn't even matter because we don't believe that you spent more time in real estate than you did anywhere else. So this is another example of a taxpayer trying to prove to the IRS that they can work a full-time job and spend more time in real estate than they do anywhere else. However, if you listen to our content, you know that a lot of people have tried to prove that they spend more time in real estate than their full-time job, and not a single person has been able to do that successfully. So if you are claiming real estate professional status and you work a full-time job, give us a call so that we can help you understand your risks and figure out how to potentially walk back some of your tax positions, or at least on a go-forward basis, get it right. And if you need some consulting on real estate professional status, hit my link in bio. We work with 900 or so real estate investors across the United States. I'm a CPA. I hire a bunch of really smart CPAs, and we'd love to work with you.